Welcome traders, I'm Adam Harris and this is your weekly overview. So it is Monday the 13th of March 2023, we're hurtling along. We have had a very eventful week last week. So I've been talking recently about how the markets have been acting funny. On top of that, with the news of Silicon Valley Bank encountering major losses, this has introduced a vast amounts of volatility into the markets. So I've seen the VIX spike heavily. That isn't over yet. There's going to be a lot of fear of contagion, which is going to make this coming week very interesting. So let's just quickly talk about economic calendar news. So we've got, starting on Tuesday, we have really got core CPI data coming out of the US midday. Don't forget, very important, the US have changed their clocks, so they're going through to daylight savings times. I beg your pardon, not daylight savings, but they've adjusted their clocks for the summer. So please be aware that that has happened in the US. So instead of the news coming out at 1:30 UK time, it's now coming out at 12:30 UK time. Then on Wednesday, we've got retail sales out of the US. We have got PPI out of the US, retail sales again, crude oil inventories. Thursday, building permits, which is really interesting. We want to see what's happening with construction or construction contracts. Are there more of them? Are they dropping? You know, are we feeling a contraction of the industries? And initial jobless claims as well, which, you know, we're expecting certain results there. So if that can be the case, they're giving me a rise of jobless claims. Then you've got the Fed manufacturing index as well, and that's still Thursday. Then you've got out of Europe, you've got marginal lending facility monetary policy statement, which is the Euro's equivalent of the US's FOMC. There'll be a press conference, and we've got President Lagarde speaking in an interest rate decisions. All of this is very, this is the kind of stuff that's going to create spikes, especially given what we've literally just happened last week. There's always going to be a bit of a concern of contagion across multiple banks. In a way, it does feel as though this could have been avoided, and so there's going to be a quick look across the across everywhere to see if there's any other potential issues there. The expectation for an interest rate hike is forecast at being 50 basis points, so we're going to see if that does happen. All right, we still need to get inflation under control, and we're going to see how that is going to turn out. Now, if I go across and have a look at the charts, we've seen actually a bit of dollar weakness, but because it's a spike, it's a reaction. That doesn't necessarily confirm that we're going to see that's going to be a continuation. So this week again is going to be choppy. Because of that, the markets are going to be extra touchy and sensitive. So we saw euro close higher, a couple of these close a little bit higher, with that dollar finishing a bit lower. We saw gold climb. So what I would comment that I think is worth noting, we saw gold climb. I saw bonds climb. That's really rare. So bonds had a big day, and that's unusual over the last few years, where I would have expected, especially when we had the biggest market correction that we've had in several years, which we had over last year. Bonds they weren't really seen as a move towards safety, but I saw a big spike on Friday, so it's going to be interesting to see if they've now double bottomed. There's bullish divergence. It implies we're going to see bonds start to increase in that. That was the Eurobond and the 10-year T-note. Cryptos are going to take a hit because stocks are going to take a hit. I think it's very likely we're going to continue to see the markets, the equities markets, indices, and cryptos head lower next week. We'll see what happens with regards to crude oils, energy. It's possible they might take a bit of a hit as well, but for now it looked as though gold moving up, which could be a sign of a little bit of a hedge, a safety hedge, combined with bonds going up a little bit, combined with cryptos and equity stocks and indices heading lower. So it's going to be, which was a surprise to seeing that dollar not strengthen. I would again have expected that dollar to strengthen. So we could see a reversal from Friday and see over the weekend the markets have changed their minds. We could see Monday changes direction completely. So just please exercise some extra caution there. We're definitely in a weird period of what's going on in the markets at the moment, and we need to know if this is the beginning of something or whether it's just an isolated incident. Exercise some caution, common sense, and that's it. I'll leave you with that. Don't forget to plan your trade and trade your plan, and have a great week.